Okay, so CDSL took a big fall during the last few months. Let me quickly give you my take on it. What's happening with CDSL? Right now, you can see on the screen, this is again a screenshot from a couple of days back. But before we get into the details, quickly check the disclaimer on the screen. Investing in the stock market is risky. Prices can go up and down. I am not SEBI registered advisor. I'm not officially registered yet. And stocks discussed in this particular presentation are for informational purposes only. I'm not responsible for any of your financial losses. Please be careful. Use this information with your best judgment and consult somebody who's a professional in case you're really seriously thinking about investing in stocks. All right. So even though I'm discussing a particular stock, this is not a recommendation. This is just my personal thoughts for you to get some better insight into how I'm thinking and how you could be thinking about the stock. All right. So CDSL prices hit over 3 months low as quarter 3 net profit falls sequentially. Okay. So again, as usual, the media makes a huge doom and gloom of everything. And the reason for that is that negative news always brings more attention and brings more virality and more stress to us as investors as well, especially the ones who are new. Okay. Now, all of these numbers, what are they basically saying? Let me just quickly summarize that first, which is the reason that they have blamed the stock price to falling. But remember, first of all, this is just a quarterly result. It is not the end of the line. Okay. The transaction charges and online data charges have reduced, and there's a 14% revenue decline. Obvious. Net profit is decreased by 20% on quarter-to-quarter basis due to lower other income. And again, other income is something I usually don't bother about, but overall net profit is fallen down. Yes, absolutely agree. That is not a good sign. And net account openings have dropped from 11.8 million to 9.2 million. Now, if you've been following markets for the last couple of months, there was a bearishness overall, and we had run up really well in the last 3-4 years. And then, of course, now the breather has come in, especially with small and mid cap, where the retailers get attracted the first. Took a good beating, which is extremely discouraging for an average investor, especially for people who are new into the markets. This is an discouraging event, and that's why the new account openings have stopped. Whenever the bull market comes, the new accounts will start opening, is my guarantee. It's almost guaranteed that when the bull market comes, people switch, they forget about the past, and they come back into the market. Anyway, I'll talk more about it later. And brokerage firms have reduced price targets, citing slower market growth. First of all, if brokerage firms were that accurate, everybody who's opened up a demat account with any brokerage firm and followed their advice would have become a super multi-millionaire. But that is not the case. Even brokerage firms have got some hits and some misses, although they have bigger resources to put behind the research. Market is such a place that most of the times, not all the time, you can be right. Okay, let me rephrase that. Market is such a place that everybody cannot be right all the time. That's the beauty of it. That's the advantage. So just because some brokerage has covered a particular stock, they do not see the future. They can only analyze what is in front of them, and they have their own limitations to understand if the stock can go further or not. Okay, so whenever I see a brokerage report, I always take it with a pinch of salt, because this is somebody's interpretation and somebody who's trying to predict the future of a company who's not even working in the company. Does that make sense? Okay, so that's my set. Having said that, of course, they do have a very methodical way of analyzing a company. So you should always look at how they're looking at the company and what are the reasons that they're citing, not just take their advice as hard and fast rule. A lot of retailers do that, which I don't want you to do. All right. And finally, increased expenses in technology and employee costs have impacted margins, which is again very obvious. I think the net profits have fallen because of that as well. The expenses have increased. If the employee costs have increased, that means, of course, they have to pay their employee. And if a company has to run, the employees are the people who are running the company. So either they're hiring new employees, which means the company is growing, which is a positive sign. And even if they're not hiring new employees, there might be people who are working in the company who need a raise, right? Why would a person be motivated to stay in the company? So employee expense is a normal expense for any company which is running at a large scale. and technology expense. This is again, I read in one of the management person's interviews over there. They have heavily invested in technology, and they have to, because markets are a place where there is new development every day. These people are scaling up. This is a technology company, not technology, but this is a company highly dependent on technology, because what you're doing is you're actually holding stocks in electronic format. So you need high quality technology infrastructure, and for that this becomes an obvious expense. Just like a chemical company would invest in new plants, just like a bank would invest in new branches, CDSL has to invest in technology to make sure that they're giving the best possible outcome to their clients. When that expense comes in, that is not going to come into the profit in this quarter. It is going to take years before we can see the benefit of it. It is almost like a capex. An employee is the raw material cost. So in both cases, I don't think this is something to be that scared of. Yes, they spend something which is not going to show up in couple of quarterly results, but in future, this is going to benefit in company becoming bigger and bigger, is what my personal take is. Okay, let's go ahead now. Let's understand something very important about CDSL. Okay, and this is where fundamental analysis, or at least common sense analysis, comes into picture. I shouldn't even be using the word fundamental analysis. Common sense analysis. Now, why is the stock falling? Now, people are thinking that just because the price is falling down and the current quarterly profits are down, at company it's the end of CDSL. Now the growth is done. Now the company is going to stop. So whenever all of this happens and a stock sharply falls after a short-term event, I always ask myself, is the company shutting down? That's my biggest question. Is the business going to stop? Like tomorrow, if government bans CDSL, that is going to stop them from working. And if the stock goes in tailspin from there, I can totally understand. I would run away from that stock. But just because a quarterly profit has come back bad and the stock price is falling doesn't mean the company's business is shut down. Okay. Now, I've made a table. You can clearly see that there are different types of incomes that CDSL is earning. First one is the annual issuer charges. By the way, this is the 31%. This is the lion's share that they make. And the effect of market sentiment is on that is going to be stable. So I've made 3 columns. What is the type of income, the percentage that is contributing to the revenue, and overall effect of market sentiment, whether market is bullish, bearish, volatile, all of that market sentiment, how much does it impact? So annual issuer charges is a charge that the corporates pay to CDSL to hold their stocks, or to list their stocks rather. All right, so biggest of this, and that is stable. That's an annual charge which comes from companies who are listed in the stock market directly to CDSL. So if nothing happens, if the bear market continues going, companies that stay listed will keep paying fees to CDSL, and that gives me surety that CDSL will keep making money. The company is not going to shut down, and this is going to be irrespective of bull market or bear market. The second, transaction charges, where the buying and selling of securities is happening from the stock of individual investors. That is where the next big chunk of money is coming in, and that is highly market sensitive, which I can totally understand. Depending on the market, if it's bull market, then a lot of people will be buying more and more stocks, so higher amount of transaction charges. As the bear market comes, keep in mind, for short term, CDSL still will make money because people are going to sell their stocks like in a frenzy, right? Even in selling, transaction means buying and selling both charges. Just like a broker, CDSL makes money in that. However, what happens is, because of the bearish sentiment, the outlook of getting that income again goes far away. Till the time bear market doesn't turn around, the new people are not going to come in, and a new share buying is not going to happen. So that is the reason why the stock has fallen. Mainly it's because of the bearish sentiment of the market. And there's one more reason which I'll tell you in a bit. Okay. Then we have online data charges, which is moderately stable. Again, hit and miss. But the next one, 11% comes from IPO and corporate action charges, which you saw we had a lot of IPOs last year. These are this is money coming from corporates to CDSL whenever there's corporate action, like dividends split, not the dividends but split specifically, and whenever there's changes in the share data, and even in IPO. Okay, all the others are small, so I won't go into that for now. E-cast, e-voting charges, other charges, account maintenance charges, again, is all of them are market stable. That means they're irrespective of the sentiment, that kind. So the only 30% that they will not get, because currently the market is down, and because of that there's been a correction. But I think that is just that is not going to be, first of all, loss of entire income. There will be less amount of money coming in because transaction is not going to stop in the stock market. Keep that in mind. So transaction charges are still going to come in. They're not going to be as big as the previous times in the bull market is. But when the bull market comes, the money will start coming in. And by that time, they're still accumulating cash from the stable sources of income that they're getting. And that is why I am not too worried about this short term fall in the stock. Right? Market reacts in an emotional manner, but if you find logic and if you go to the basics or common sense, you'll realize, okay, fine, this is not the end of the world. All right. Now, the other reason which I feel is also contributing, and again, I'm going to give my personal takes on it. So please take it with a pinch of salt. SEBI has approved much awaited 3,000 crore NSDL IPO, because of which initially I had not applied for CDSL IPO back in the day because I was waiting for NSDL IPO. But now they have recently given an approval, right? So I think a lot of large investors or even retailers maybe are keeping the money, keeping the gunpowder safe, taking it out from CDSL and maybe switching to NSDL, or maybe portion of it is going to CDSL, including FIS, DIS, individuals. Okay, so there might be a case where these people are collecting funds out of CDSL and going to go into the next depository because these are the only two options we have. Okay, now bear markets also means the new business is not going to come in that easily. I strongly believe that there'll still be account opening happening, and we can check the data from Jan to March again. But of all of this, there will still be accounts open, but they will not be at the rate at which it was previously enjoying. But luckily for me, I come from an era where the account opening rates were anyway super low, and yet CDSL grew. This is pre-COVID era. Okay, so the account opening in stock market was never that high. It is just happens seasonally, depending on how the market is doing, depending how bullish the market is, right? And that is stock market is a strange place where people come in when the prices are going up and people go away when the prices are going away. That is so weird because it should be the other way around, right? Everywhere else, people go to buy things when the prices are falling down, but in stock market, it's exactly the reverse. Anyway, so as and when the market cyclical trend changes, you will again hear the news of record account opening, so on and so forth. So this is just a matter of time. And for long-term investors, this is an extremely good news. But for short-term players or maybe dealing with less than a few months basis trading, I don't think this is going to work out in your favor. And here's the bigger kicker. Okay, I know I'm exceeding the video time. I usually want to keep it less than 10 minutes. Here's the biggest kicker. Most demat accounts are not even that active in delivery segment. Most of the retailers are active in the FNO segment, which is where the money and that transaction and that holding of the stock doesn't happen in CDSL. So CDSL holds equity shares of corporate companies, not the FNO contracts. And there's no delivery, there's no holding for that. There's just an open position in the FNO market. Okay, the rest of them, even if there are crores and crores of account, out of which I would say 60 to 70%, and it's a rough estimate, I don't know the real deal, are not even people who hold stocks, or they are actively involved in the stock market. They just did it out of whim and fancy. So I'm waiting for a period where, let's say right now 10 crore accounts are there, only 3 crore accounts are active. Waiting for a period where there might be 30 crores account open and 10 crore account would be active. We are looking at that scale. Keep that in mind. At least I am looking from that perspective. Definitely, we have got 1.5 crores at least in our country. We can definitely have 50 crore demat accounts. There's 1/3 of the population. All right. So my final take, and please understand my perspective on this. Depositories like CDSL and NSDL are both. These are the only two companies which are like our stock holding banks. Okay, and they have no other competition. These are the only two companies, government licensed companies, which can hold demat account stocks. It is like similar to looking at HDFC and ICICI Bank 15 years ago. But here's the kicker, there is no competition. ICICI, HDFC, all of them have many banks that are competing against them. But NSDL and CDSL, these are the only two players in the Indian continent right now which can hold stocks. And just like what we saw in bank accounts, earlier 30-40 years ago, not everybody had a bank account. Banking penetration was low. Similarly, right now, demat account penetration is low, but it is good. As people get more educated, more and more money comes in, as economy grows, people are going to be investing in stock markets, right? So number of demats account is going to grow, and it's going to only happen between these two companies. Okay, so looking at one quarterly result and seeing a short bear market and getting discouraged is not something I would do. That's my personal take on it. Hope this particular message helps all of you. And if you have any questions, please put it in the comments below. Please do not ask me for direct advice. SEBI is coming in. Sorry. Please do not ask me for direct advice. SEBI is coming in strongly on people with recommendations. So I want to keep this purely educational. And if you have any specific education related questions, drop it in the comments below. Hope this helps. I'll see you guys next time.